and legal stuff.
Weird
Oh
lie.
no.
um, but yeah, like for instance, I think you know when I was involved heavily involved in BitShares. BitShares has like a very big Chinese base, like community base, and I think like BitCNY, which is the most popular stable coin that BitShares has. I'm pretty sure that that's like BitCNY, for instance, would be a very dangerous thing in China if it got any sort of traction, and then there's a very big chance it would get banned and just in general be like the regulators will not be happy about that compared to Bitcoin, for instance, which is more like some sort of weird gambling instrument rather than an actual threat to the money monopoly. So that's some of that's one of those things that really has to be thought about with the stablecoin. Like that's why also the stablecoins like this like that's why I think a system like Nubits isn't really like a Nubits by itself isn't really that safe in the long term. At least if you solely use the Nubits mechanism. Um, because I mean, at some point, there's just those single points of failure, and those liquidity providers and that kind of stuff will just be attacked because it'll be like at some point it's going to be an actual threat to someone somewhere, and they're going to like try really hard to take it down. So that's why decentralization actually becomes necessary. Um, However, I think that's still going to be very far into the future. That's going to be at least 5 or 10 years into the future. So in the meantime, I'm actually of the opinion that it's not really that important to do anything decentralized until then. Like you just have to have like a decentralized endpoint, basically, like a decentralized. Like the goal needs to be decentralization because that's the only way you can ensure your system is like robust in the long term. But in the short term, it's usually like a way too big trade-off to like do instant decentralization, which is also why like that's basically like eDollar is going to actually be fully centralized at first, and I define centralized as in it's going to be like it's going to be based entirely on trust because at first the feeds will be centrally controlled by very few people until we get Augur to like provide reliable feeds, but that's still going to take a while. And yeah, I don't really know how long it's going to take, but during that time, like while the feeds are centralized, then the entire thing is like it's basically an IOU, like it's fully based on trust because at any point in time, the person who controls the feed could just destroy the system. And I also talked about that in the last Hangout. I just think it's important to like mention that because if I try to like gloss over it, then someone else is going to bring it up and then call me a fraud for not mentioning that risk. And that's also another thing. Actually, that's like one of the recent developments I came up with. Like one of the things I've been thinking of this week is how to make sure like the entire the biggest issue will always be how to make the eDollar as liquid as possible and like make it like fully liquid so any amount of money can be moved in or out at any point in time. Um, and I think that will mainly be a problem, or like mainly be an issue of bootstrapping it. Like once you actually bootstrap a stablecoin and it becomes popular and people start to use it and start to trust the pick, uh, then yeah, you thought Maker is controlled by community or DO? Yeah, Maker is like a contract controlled by coin, like control that contract through voting, and then what they do is they designate people who can stake or like validate with a small amount of the collateral, and then they can use the income from that to do stuff that should basically improve Yeah, kind of like the doc, the decentralized, what's called decentralized organization upgrade guy, kind of like that, yeah. With like an inbuilt what Vitalik calls constitutional slowness, which means that you can't update anything in the contract, like any important thing, without like priming it first and waiting for some period of time. Yeah, over time, the goal is like over time, Maker has to be fully 100% decentralized. Um, you know, it like otherwise it'll be destroyed. It's pretty much that simple. Um, but at first it will be fully centralized. Also because I will start off with basically like me and then a few others will own all the shares in the beginning, and then we will be selling off the shares slowly over time, kind of like Ripple is doing it, and then use all the money um, from selling it off to improve liquidity. Yeah, migration plan from decentralized to decentralized. Like basically that stuff will be solved with the constitutional slowness system. Like so that will be inbuilt every version of the keeper contract, which is what I call like what I call maker. So in my terminology, maker is a DAO that functions as what I call a keeper, which is kind of like a market maker, but also with like the role of like taking care of the feeds and taking care of margin calls, taking care of like soft margin calls, so like forcing people to cover and basically being like the entity that is responsible for ensuring there's always liquidity in the system. Like there's always enough liquidity for anyone to get their money in or out. Um, so that's what Maker does. But at first it's going to be like, at first it's basically going to be a small, very centralized community of people who own the Maker shares who will be doing this. And then over time it'll be like, it'll like branch out and it'll be sold off, and then like the Maker shares will be sold off and used for like improving, building on the system and providing liquidity and that kind of stuff. At first, my idea was to basically take the entire 100% of the Maker shares and then just give myself all of them and then just sell them all off over time and then do all the market making myself. But that was when I thought I could just build the whole coin by myself, because I think it's relatively simple. That's what I thought at the beginning, at least, because making the actual coin, like making the coin contract, that was really easy for me. It didn't take me more than like a week or something come up with a design for that. But then now I'm realizing that the wider ecosystem and like modules and stuff that has to be built around it, and like such as also a proper front end and like infrastructure for making other assets, so you can also make all the other pegged assets, and then the keeper contract itself, which is really complicated to make. That constitutional slowness is really difficult, a lot more difficult than I thought to make. Because every time I've been working on it, and basically I've had to pretty much throw out every approach I've tried so far, because it gets too complicated, and I want it to be it should be really simple in the contract. It should be so simple that anyone can look at the contract and then understand it in the Solidity code, I think. And I also think it will be possible to do that. It'll just need more people than just myself working on it. So now the plan is that I'm going to split up the Maker shares into two pools. So 50% is going to go to liquidity, and then 50% is going to pay developers. So like one half will be given to me that I will then use to form a company that will basically be doing market making, that like will raise funds from selling it off and then do market making with those funds. And then the other half will be controlled by me, and then a group of developers, of basically anyone who's interested, who want to get in, they can be paid from that pool of Maker shares. And then I'm hoping that to get Nikolai from BitShares, to get him to like to basically be like the senior guy who actually knows how to do development and that kind of stuff, because I don't really know how to do that. But that's all something I'll be working on in the coming weeks. Um, so yeah, so like for instance, Ola, like if you wanted to help out with the front end and stuff, then you could be paid from that pool and get some get some maker shares share dropped on you, or like given as a kind of vested uh, payment for work. And that's what it's going to be meant for. Okay, let me answer some questions. What would be the relationship between the eDollar contract and the other kind of currency contracts? The relationship between them would be that um, the other currency contracts will be collateralized by eDollar. That's the idea. Um, like, or I mean, there will be many other stable coins. There'll be endless amounts of stable coins with all kinds of with like many different systems, and there'll probably be other like big copies of eDollar as well that are collateralized by Ether and collateralized the same way eDollar is. And then there is this specific type of stable coin that I call an e-asset, which is specifically a stablecoin that is collateralized by eDollar and pegged to something that is not USD and has like the primary function not as a coin but as an instrument that can be used for speculation in that asset or hedging in that asset, like the e-gold and that kind of stuff. And then there's so you can have the other currencies, and they will like it's going to be. I guess there will actually be both kinds. They'll both be like an e-asset CNY contract, which is collateralized by eDollar, and then there's probably also going to be someone who is going to make CNY like directly collateralized by Ether. And then it remains to be seen which contract will or which stablecoin will have the most liquidity. I imagine that basically what is like it's only going to be the currency, so like the assets that are very popular by like by DApp users that are going to survive if they are collateralized by Ether. If you don't if you don't use another stablecoin as collateral for your new stablecoin, then you really need to put in a lot of effort to keep it liquid. Whereas if you use eDollar, then it's going to be really easy to keep it liquid, but it's also going to be a little bit less independent, basically, because it's going to be dependent on the eDollar contract. DAO governance is a huge undertaking. Traditional company isn't that a risk? Is that this in relation to the market making company? So basically, what like there's going to be a traditional like I'm going to form a traditional company doing that's going to do market making for eDollar, basically eDollar to Bitcoin and eDollar to USD most likely. And at first, this is going to be done as like a kind of service to the system. But over time, the idea is that that company will just evolve into like a company that makes money by doing market making. And at first, it will own half of all the maker shares. So it's going to be a risk, like it's going to be centralized. And that's basically just another example of how eDollar will be centralized at first, but also an example of how it will over time become fully decentralized, because there will be some sort of clause, like rule for this company, that it must sell off all of the maker shares except, let's say, 5% or something of the entire supply. And then so like to ensure that there's not going to be this single point of failure. So over time it will just sell off like as the system becomes bigger and bigger and needs more and more liquidity, and the value of maker shares increase, then the centralized company is going to own less and less of it, and thus be less and less of a risk. Um, Let me see. So Ethereum tokens are what my interests are. So basically, eDollar to one stable Ethereum token. Uh, I don't really understand that. Like, I assume you mean like you're going to, like a token means that when someone deposits eDollar to the Ethereum contract, then the contract internally rewards them with a token that can then be redeemed for an eDollar. Is that what I mean? Yeah. So like I basically call that, like I'd call that just having eDollar in the contract itself, and it's actually like an entire like system set up in the business model for that, because Maker will be making money, like they will get their income from the collateral that people put up to issue the eDollar. And in order to like incentivize steps and other projects and stuff to get people to use eDollar, so people will hold eDollar, so there'll be more collateral in the eDollar contract, then 50% of all the income of Maker will be given, just like distributed to contracts that hold eDollar, basically, on, I guess, on a monthly basis. So basically it'll be like so like the DAO Maker will like choose some group of administrators or delegates or whatever, like some group of people who are trusted to have the authority to like take care of this distribution of the income. And then what they'll do is they'll use like basic data gathering to figure out like what the average amount of eDollar a given contract held within the last month. And then there'll be some thresholds. So like a contract will need to have above some amount of eDollar on average over a month in order to qualify for the payout. And then if you qualify, then you get like the payout. Um, so like so Maker would pay Pokerium, for instance, if you have a lot of people who have deposited eDollar to your contract. Um, and for that reason we use like the system, at least what I've made so far in the contract for depositing eDollar, is it doesn't use the MetaCoin API that I've seen in some of the examples of other coins. It uses like an explicit deposit function that has to be set up in the contract, that if a contract wants to support eDollar, then they have to set up a function that basically works with the eDollar deposit to contract function. And actually I have like an example of it. Is my screen still sharing right now? Yeah, looks like it. So on GitHub, I have, let me see, this one. This is like an example of, oh, here we go, that one. This is like an example of how to like accept eDollar into your contract. Like, so if you add that, then you have like an internal balance, the way I've put it here, then when then people will only be able to call the contract depositor function when they're actually sending eDollar in the eDollar contract to the address of the contract that has implemented this function here. So like it will always correspond one-to-one, and then when they do the withdrawal, they'll always withdraw the correct amount using the eDollar contract. And then it'll be really easy to like track what contracts hold what amounts of eDollar, and then compensate people with their 50% of the income, like compensate the debts with 50% of the income from the eDollar contract. Okay, so if you're looking into different jurisdictions for setting up this market making company, yeah, it's going to be in Hong Kong, perhaps Singapore, but most likely Hong Kong, because I've already done some market making stuff, and with BitShares, and I've found that it's basically Hong Kong is basically the best place to do it, because it's easy to create a company and there's no taxes for it, and it's pretty crypto friendly. And also Bitfinex is in Hong Kong, and Bitfinex is where I'll be hedging most likely when I do the kind of remarketing that I'm going to do to keep it liquid. Set up in Switzerland. Yeah, this is a really good idea. Yeah, black swan probabilities. So actually, I've realized. In fact, I think we talked about it in the last Hangout. But one of the ways that the black swan so you can actually issue coins with more than one type of collateral, such as if it becomes possible through sidechains, Bitcoin, for instance. So you both have, so you have like the same like eDollar in the same contract that are collateralized both by Ether and by Bitcoin. And then if either has a black swan event, then there's a bigger chance that our reserves, which will be held in gold with Digits Global, which is like a physical gold gateway that works on Ethereum and EtherX. So there'll be a bigger chance that we can cover the under collateralized positions with our gold reserves if only 50% of the collateral type is affected by the black swan event. But in general, it's going to just be like, I mean, it's going to be interesting to see what the hell is going to happen with problems with stablecoins. And like one of the things that possibly increases the risk is that I think there will be like a correlation between the volatility of Ether and the amount of people who use the stablecoin. So I think that Ether will probably become more volatile the more people use eDollar, basically, which makes eDollar itself more risky, and which actually means that the more people who use eDollar, the higher the collateral requirements have to be, rather than lower, which is what you'd normally think. But then there is like the opposite effect of if more people use eDollar, then there'll be more money in the Ethereum ecosystem in general, and there'll be more Ether will have a higher market cap, and also higher liquidity, and for that reason it should have its volatility going down. So maybe the end result will actually be that the the collateral requirements should just be constant actually, and there'll be some sweet spot and some number for the parameters that's just the best number, and then we'll just end up just going with that and not changing. And actually, I think like when the first Reddit post I made, Vitalik, he commented that he thought the best parameters were 150% for the margin call. No, not her. Sorry, 125% for the margin call and 200% for the issuance, like the initial collateral. And I think at least like 200% for the initial collateral is probably a good idea, I'm thinking now. And then I also have the extra feature of the forced cover, which means that like the DAO will actually be able to pretty much force anyone to cover their position at any time. Whenever they need liquidity, they just force people to exit their position. And I think that's going to increase. That's going to make the system somewhat safer. Because that means like it'll be possible to call early. Yeah, and I don't like that's not my numbers actually. 200 and 125 is Vitalik's numbers. My numbers at first were 100, actually 200%. Let me think. No, 150%. Like my numbers at first were 150% and 300%, which is what BitShares uses for BitUSD. And I don't know where those numbers came from either, but that's from Dan Larimer, who's the other guy who's been like, he's like the guy who's probably been doing the most thinking on the issue of stablecoins. And yeah, so I thought that's probably the best place to start. Yeah, I mean BitUSD works really well. It's been fully like it's kept its peg for the past 6 months, or 8 months or something now. So it's been working really well. Problem is just it has no liquidity. I mean that's the other problem. Yeah, and actually that leads me to the other thing. So in addition to the diversified collateral, that also made me think of another mechanic that like that we could actually use that will enable me, because the thing is actually that there shouldn't actually be liquidity issues. Like theoretically it should be possible to make a stable coin that is like fully stable but also fully infinitely liquid, if you could say like that. Like it should always be liquid against its collateral at least. And the problem is like you have to use some sort of complicated trading algorithm to do this. Like so you'd have to have some contract that trades in this really fancy way. And then you have the issue that the contract needs to have super well trusted price feeds. So the idea I've come up with is basically to make a centralized trade-off. Basically, that in the beginning, eDollar will actually be more like new bits than it will be like BitUSD, because if we have diversified collateral, then we, in addition to having eDollar backed by Ether, we can also have eDollar backed by Bitcoin, for instance. And then the way we like manage the risk, so for when we have this diversified collateral system, is that we need to have like a depth ceiling basically for each collateral type. So you could say, for instance, that at no point in time can there be more than 200,000 eDollar backed by Ether, and no more than 300,000 eDollar backed by Bitcoin. And then like the maker has to like slowly increase these numbers over time as the liquidity of the collateral increases and the volatility decreases, and like the general like the general trust in the systems in those collaterals systems would increases. So you don't suddenly have like like a billion eDollar that are all supposed to be worth $1 each, but they're all backed by Ethereum, which that could theoretically happen. And you could even have like Ethereum at, let's say, a market cap of like 3 or 5 billion, and then you could have a billion eDollar, but it wouldn't actually be safe. Like that system would be really, really prone to having like a black swan event, because at no point in time will someone be able to cash out $1 billion. Let's say from Bitcoin, for instance, right? If someone tried to sell $1 billion worth of Bitcoin now, then Bitcoin would actually go to zero. Like it would just completely disappear. Every single exchange in the whole world would just go to zero, because all the buy orders would just be used up, and Bitcoin would become completely worthless. Of course, over time, you could see more buy orders coming back, and you could see people rush in to buy at a lower amount of stuff. But in the short run, that would be like a complete death sentence to the system. So that's why I think there need to be like these debt ceilings, basically, that control the maximum amount of stablecoin that can be issued for each type of collateral. And with this debt ceiling system, you could also it also actually becomes more safe to use like less trusted types of collateral, or like let's say less liquid types of collateral, like less smaller kinds of collateral, like because Ether and Bitcoin are basically, they're like giants, right? They're like gigantic systems that are pretty well trusted and pretty stable, and there's going to be a big market for them. But you could also use, for instance, Maker itself, like the Maker shares, um, as collateral for eDollar, as long as you just have a very low debt ceiling for it, right? Because there's going to be some demand for Maker shares, and there's going to be like order books with buy orders in them and stuff, but it's not going to be that much. And then what I'm thinking to do is basically, at first I will just put a debt ceiling for Maker backed eDollar. It's quite a bit higher than what it should be, basically, and then have this, like all the eDollars that are issued from the Maker backed eDollar is basically not really, like it's not really following the BitUSD approach. It's basically like new bits, where you have these coins that are just, they kind of like what do you call them, like implicit IOUs or something like that, like indirect IOUs, because basically they would be backed by the fact that like, because what would happen is the basically my market maker operation, the company that I have that holds 50% of the maker shares and would be responsible for doing for holding the system, keeping the system liquid, would issue these eDollar with the maker shares they have, and then they'd just buy them back in the same way that Nubits does it, where they just sell them and buy them back for 1 USD, sort of like an IOU, even though it is theoretically backed by Maker. And then over time, like the importance of this centralized or this trust-based peg enforcement would then decrease as more people start issuing eDollar backed by Ether, and general liquidity increases, and then also as Maker increases in value and liquidity, the liquidity of Maker increases, then these initial Maker-backed eDollars will just become properly collateralized, basically, and they will function. They will no longer work on like a Nubits type peg. They'll just work on a standard eDollar peg system, basically. And I think this should allow us to like start off with a system that's very liquid, like Nubits, or like an IOU, and where you can put a large amount of money into or get a large amount of money out of pretty easily, with the trade-off that it will be more centralized. But that will not really be a problem, because it will not really increase risk, because the system is centralized anyway. So the idea is to basically get all the advantages of doing it centralized at first, since it will be centralized at first, and then over time, as we make it more decentralized, then we slowly phase out the reliance on trust-based solutions, and then basically slowly go from a centralized system to a very decentralized system. So that's the ideas I had for it. Let me think if there's anything else I wanted to talk about. Does anyone have any other questions? Oh, let me check this out. User blah blah inside. Is it most ideal for contractor users transact in either Bitcoin, eDollars? This depends on like what kind of actually it depends a bit, because like if a contract, a dApp or a contract that uses eDollar has to trust maker and has to trust the eDollar. So there's like an added element of trust if you're using eDollar rather than just using Ether. But then the advantage is also pretty big because you get the stability, which is better. Like, I mean, if you want normal users to use your dApp, you can't use Ether or Bitcoin. It just doesn't work. Normal, it's the volatility of Bitcoin and the volatility of Ether is completely unacceptable to average users. So they need to have a stablecoin like eDollar or something else that is pegged to USD, most likely. Like, I think even have it pegged to like something else that's close to USD will for some people still be unacceptable, just because it's, I don't know, scary to see the amount of money you have change suddenly when it's, if it's displayed in dollars for someone who understands dollars, and then they see the amount of dollars they have change even though they haven't done anything. That's just something that really will turn off users. So that's what eDollar is geared towards, like the kind of average people who just want to use a dApp and don't really care about care about blockchains or care about any of that stuff. And then the other advantage for dApp that integrates eDollar is that they get paid for it by the eDollar contract, so they get 50% of the income they make from the gambling contracts. Yeah, I think they're like, gambling is one of those things that's like, it's just about money, right? It's where there's lots of people like to put a lot of money into gambling and gamble with a lot of money. So that's one of those cases. Like, I mean, not only is it good to have gambling done in dollars, just because some guy who gambles a lot, he would probably prefer to gamble in dollars, just because people tend to prefer that, but also because, like, it's a good way to monetize a gambling contract, I think. I mean, I could easily see a gambling contract that has no fees and just makes money off the passive income it gets from holding eDollar. That will also add to the rev. What does that mean? Rev of the gaming side. Yeah, totally. But like, the way I see it, you could, like, you will have, there's always going to be those, when you put some dApp up on Ethereum, there's always going to be a bunch of people who, like, if you put fees into the dApp or something, fees into the contract, then the first thing that's going to happen is someone is going to copy your contract and then make it like, make the same contract and the same dApp entirely, and then just remove the fees. So using eDollar for monetization and having no, like, fees hard coded in the contract, I think is one of those ways that you could you could do monetization without having to, like, without being vulnerable to people copying your contract, because there's no way to actually avoid the the income from eDollar. So you can't have someone copying your contract and then somehow like removing fees that aren't there, because in reality it's like, it's paid out. It's like a positive payout rather than a negative fee. Anyway, to avoid the centralized model. Well, there is definitely, but I disagree that it's very bad. Generally, I think for, like, smaller projects, then it makes no sense for them to be decentralized at all. It gives no advantage of them. Even if, let's say, we waited for Augur and we waited for, all this stuff, the entire, like, liquidity of the whole system at first is going to basically be done, like, be held up by me, basically, who's going to do it first. And there's not a big chance that anyone else is going to step in and subsidize liquidity at first, like forcefully make sure there's enough liquidity at first. Generally, I think that decentralization is, like, the way that it's put up in many cases in the cryptocurrency communities is, like, it's become extremely overrated, because decentralization nowadays is like a marketing buzzword, basically. It doesn't really mean, like, it doesn't actually mean no central point. It means more like not government controlled, or like not controlled by the Illuminati or something like that. You know, like it's like a system for getting people to cheer for your coin rather than some other coin. You know, like for instance, when Bitcoiners they hate Ripple, why do they hate Ripple? Because Ripple is not decentralized, and then they just define decentralized in some way that that whatever means that Ripple is bad. And the first priority of eDollar is going to be to get it highly liquid. It doesn't matter if it's decentralized at first, but if it doesn't get liquid, then it's completely relevant that it's decentralized or whatever. And it doesn't matter that it cannot be used for bad, because it cannot be used for good either. Yeah, it's not related to Bitcoin, then it's bad. Yeah, but so yeah, my philosophy regarding decentralization and centralization is basically that once other systems begin to rely on your system, then centralization is bad, because that's when it starts to become a situation where you have leverage over these other systems. So my personal um, my personal, how to say it, milestone for when eDollar like becomes really dangerously important for the system, or where it becomes really important that eDollar is fully decentralized and completely out of like not controllable by a single person, will be if most of the if most of either price discovery is done in eDollar. And that's one of those things I would really like to see happen. Like if Ether is not traded on centralized exchanges, but instead is traded on EtherX for eDollar or some other stablecoin, then then it'll be impossible to have those kind of goxing events and like those big trading problems, or like all this stuff that's happened with Bitcoin because of the centralized exchanges. So it will make the entire system way more robust. But of course, like if you have like a token that itself is centrally controlled, that is used for price discovery, then that's basically just as bad. So yeah, so basically my goal would be that if eDollar starts to become like a significant percentage of Ether liquidity, like of the Ether pairs of liquidity in Ether pairs, so like so EUSD becomes, let's say, as big as some amount of ETH USD or something like that, then at that point like it will be urgent to like say spread out all the maker shares, and it will no longer be responsible for a single company to hold some big amount of it, like 25% or 20% even, will be irresponsible. So if eDollar becomes very successful and very widely adopted too quickly, like quicker than I can sell off the shares in Maker, then I'm going to have to do some sort of system where I just like sell them all at once, or put them all in a contract and then slowly sells off, or something like that. Okay. Isn't the main problem with centralization that this way, say, Tony Abbott can force you to shut it down? Well, if it's truly centralized, there isn't anything you can do. Yeah, that's exactly it. That's basically the only advantage of decentralization. And it's pretty much okay. Actually, there's two scenarios, right? The first scenario is, first problem with centralization is this, that like the authorities can force you down, and then the second problem is that you could steal the money yourself, right? So those are the two issues. So there's like two incentives, and it's true, it's like a great advantage, but it only really comes up in certain cases. Like it doesn't matter that let's say BitUSD or new bits in in the situation they're in now. It doesn't matter that they are decentralized because there's no one who's trying to take them down at all. They're completely off the radar. And even if they grew to like 10 times the size they are now, it still wouldn't matter. Even like 100 times the current size, it still probably wouldn't matter. Like, with that thing called, what was it called? I think it was called eGold, actually. Like that online gold thing. It grew enormously, insanely huge before it was shut down. I mean, it was something like $100 million or something. Or maybe even more. Can't remember. But some massive amount of money anyway. And before a system reaches that amount, it's not. I don't think it's that important to be decentral. That the system is decentralized, because even if it was then taken down before it even became big, that wouldn't really then that would just be a signal. Okay, the next system we make should be decentralized, fully decentralized from the get-go. But the difference is that if you start off being more centralized, then you just have a much better, better chance at bootstrapping adoption. So yeah, Maker Corp will have these. With Maker Corp, do you mean the centralized company? So I mean, Maker itself is going to be decentralized by design from the beginning, but distribution is going to be fully centralized, right? Because it's going to be owned by very few people who will sell them off in order to bootstrap liquidity. But ideally, Maker, once we get going, Maker will be fully decentralized, or fully spread out from the very beginning. Basically, there's not going to be any single it's not going to be any single person who will be able to do any of that stuff in the Maker contract. And the Maker contract will actually be made so that, because of the constitutional slowness, it will actually be so that even if Maker was controlled by a single person, that single person will still not be able to steal people's money. He would only be able to initiate a steal, and then people will be able to see, oh, this guy's trying to steal our money, but we have a month to pull our money out before he can actually steal it. So that's going to be the safeguard, the safeguard there is at first, basically. We're talking about currency that poses a real threat in Bitcoin parity. One user. Yeah. Yeah, I think probably that again, and that's also what I said earlier, right? I think that in 5 or 10 years' time, the regulatory outlook on cryptocurrencies is going to be very different. And yeah, I think it's very likely that stablecoins, or maybe just all cryptocurrency in general, because stablecoins exist, could be banned completely. Because whereas Bitcoin is like this weird toy for drug dealers and libertarians and that kind of stuff, but it's so freaking volatile and it cannot be used by normal people, then that means that the regulators and the banks and all that stuff that the Bitcoiners always talk about is they just, for them it's not really serious. It's just a toy, basically, and it's not really that dangerous. But like I said, I think China is a country that could very easily see this type of private money arise, and then very quickly, if it saw what it actually was, it saw this is a stable currency that can be used like a currency, and you can actually hold your money in it, and you can put your savings in it with relatively little risk, and in some cases better understood risk than the kind of risk you have when you put your money in the bank rather than putting it on the blockchain where the collateral is totally transparent. And yeah, then I could see them banning it or like at least attacking it in some way. And yeah, it's not possible to. I mean, it's possible to ban legally, but it's not possible to actually do anything about it. The only thing you can really do is you can make the exchange of it illegal, right? You can make the exchange points illegal, and that's also going to be another thing that luckily, like, that's one of the great, like, the really awesome features of a stablecoin. Like, the really awesome things that a stablecoin enables is that with a stablecoin, things like local bitcoins, like local exchange, becomes so much more easy, and hopefully we could actually see like local trade become the only way that you obtain the coins, like, if we're lucky, because it just with like proper mobile banking or something, with like a mobile banking infrastructure, or like well working local transaction infrastructure, then all you need is basically a very simple reputation system, and then an escrow system, and then you can do like very convenient local trade in coins, in stable coins, right? And then you can take the stable coins and then you can exchange them for Ether on EtherX on the blockchain. So you do it fully decentralized. And that's like I said in the last Hangout, then ideally I'd want the exchange points to be integrated into the front end, like the primary front end of eDollar. Over time, there should also be more than one front end, because it's not a good thing to have like a front end that is, because the front end will be like the design of the front end and that stuff will be controlled by a single entity, because that's just how it works, right? So over time, there should be more than one front end that interact with the contract, and then one of these front ends, the one that I will be working on, which will be like focused towards ordinary people who don't really care about blockchains, will have the funding, like the exchange point and the buying, the point where you exchange fiat to eDollar. It should be integrated directly in the front end, and ideally, like, we could have something like Coinbase directly integrated, so you could just buy with a credit card straight from the front end. Even though it's going to be super weird for the user to do that at first, because if we're going through Coinbase, then we're going through Bitcoin, and then they'll be like buying with their credit card, but they won't get their eDollars until a couple of days later, and when they get them, they're going to have changed in value because they went through Bitcoin and stayed and like had their value denominated in Bitcoin for some time. So it's still going to be a weird user experience, but still easier than having to go to like multiple places, which is one of the things I think that is a big problem with cryptocurrency user experiences right now, is that you always, like, if you want to do something with your cryptocurrency, you always have to, like, first you go to that place, then you go to that place, and then you go to that place, and then you download that thing, and blah, blah, blah. And that's why people, for instance, they stay with Coinbase, because Coinbase, you just go to Coinbase, buy some coins, that's it. And then you end up having all the Bitcoin held in like on like a MySQL database with a centralized company. What about front ends? Public.com names that are just pointers. Yeah, I've also thought about doing the blockchain.info style website, and I don't really know what the best way to approach this is. Because like there will always be a pretty big risk with blockchain.info style sites, and the front ends that are just like pointers on how to use it. I'll definitely make that, and I'll probably have the primary one be whatiseusd.com or something like that. Like, that's where you go to get information about the coin. Like, or if you type it into Google, that's what you're going to get. I might also buy one of the eDollar related domains. There's like e-dollar is for sale. This one. I'm a bit on the fence about it because I don't really like the dashes, and I wish I could get eDollar.com. No, it's like like it's privately for sale. Like so some guy is selling it for I think $2,000. Um, yeah, I mean, it's like if that's the name, then if the name of the coin was E-dollar, which could be, instead of I've settled on that, but it could be this as well. Oh, how the there we go. No, I think email was originally written as like written this way. Uh, yeah, there's no way I can do that. But I mean, I will not be able to stay anonymous anyway. That's also the problem with the blockchain.info style site. But on the other hand, I mean, this is an issue that this thing about staying anonymous and staying hidden and protecting against regulation is something that I think should not be done proactively. Like it should just be done when at some point the regulation, like the regulators, they get mad and realize that people doing derivatives and complicated financial products fully anonymous and fully decentralized. At that point, when they do that, that's when you shut down the centralized front ends and you turn it all into a peer-to-peer system. But before that actually happens, I don't think it's worth the resources to like proactively um, force people to use the peer-to-peer system. Say like that. So before that, it should be allowed to have a centralized entry point, as long as there's like a backup and like a plan for what do we do when at some point we have to shut down the centralized point. But yeah, I'm still considering whether or not it should be a goal to have um, a blockchain.info style um, client web web wallet kind of thing. Because I mean, it could be really powerful if there was this, like if there was a web wallet that just worked. I mean, then you basically then the user experience would be like PayPal, but PayPal, but where you can use your money for all kinds of stuff. Um, yeah, that sounds great. um, Maybe you can use like a DNS shield or something for your for them. I don't know. Um, I'm not really an expert on how to stay hidden and that kind of stuff. And my own, basically the way my approach to all this uh, regulatory risk thing is that I'm Danish and I stay in Denmark, and Denmark has just been like it's been really open towards cryptocurrency in general. And they even have this, for some weird reason, we don't have to pay taxes on cryptocurrency income, which is really freaking strange. And we have like a state-owned Bitcoin broker, which is pretty cool. So yeah, they're also very Isle of Man, very Bitcoin friendly. Oh, that's true, Yuri. It's not necessarily true they will freak out, and also it will be different from jurisdiction to jurisdiction. Mainly, I mean, my main concern, and it's primarily China. I'm pretty sure that China is going to freak out. They're going to get like they're going to go nuts. The other places probably be different because like in a scenario where cryptocurrency gets really big, that also means that there's going to be a lot of people who are using it, and suddenly in a democratic country, it's going to be an issue if you start to like ban something that everybody's using. People are going to be pissed about that. Yeah, it's not so much. I mean, the thing with China is they don't really care about the rich people taking money out of the country. That doesn't really matter because China has always been about, um, taking money from the poor people. So that's the problem. Like the problem is when the poor people start being able to put their money, take the money out of the country and take it out of reach of the banks and that kind of stuff. That's when they're going to get really, really pissed. Um, yeah. So it's just generally it's going to be really interesting to see what the hell is going to happen, legally speaking, with cryptocurrencies. And then also just really interesting to see what the hell is going to happen from like from a business point of view, like how big blockchain is actually going to be, and how big Ethereum is going to be, and that kind of stuff. I mean, it's very difficult to predict. I could easily see Ethereum become as big as Bitcoin very quickly, and then if that happened, like if uh, if Ethereum became anywhere near the size of Bitcoin, then I think like we'll just see this weird domino effect where Bitcoin just like gets sucked up by Ethereum basically, and like because at some point the core Bitcoin infrastructure is going to be to like just going to move over to become to also support Ethereum. And when that happens, that's then Bitcoin basically loses its entire edge, and yeah, it could just be really crazy to see. So I'm looking forward to that. I don't have a degree in finance. I dropped out of international business because I was working on my like I was doing. I've had several companies in China. The biggest one was like an HR company that I was doing at that time, and then so I've studied some finance and some economics, and that's basically where I have my knowledge from. Yeah, Bitcoin has a big first mover advantage, but I also think like Bitcoin ultimately, like all of the success of Bitcoin comes from drugs, and then it comes from just like the libertarian euphoria, like all the libertarian dreams about this and that, and I don't really think that all the venture capital companies that have invested in Coinbase and all that infrastructure that right now is supporting Bitcoin, I don't think they invested in it because they cared about the libertarian stuff that Bitcoin is all about. I think basically many of them are doing something like they're saying that thing that we've heard. It's actually we don't hear it that much anymore, but we used to hear it a lot where people said, "Yeah, the currency of the future it's probably not going to be Bitcoin, but it's going to be something like it." And that's what I think many of these companies have invested in. And if we're lucky, then the people who think in that way, who are thinking, yeah, Bitcoin is the first step, and then you know, there's going to be some system that solves all of Bitcoin's problems, and then that system is going to be the big system. And if we're lucky, then they'll see Ethereum as holding that, like being that taking that spot, because Ethereum looks like pretty much it was made like, we have this blockchain thing now. What can we do with the blockchain? Okay, we can do this and this and this, and then okay, let's implement all of it. Then you can do anything. Uh, but it's going to be all about the yeah, no. The thing is actually that I think in the very long run, and this is actually pretty funny because this is one of the big things that Vitalik and Dan Larimer of BitShares have been debating, and that is whether or not a deflationary currency can be a currency. Um, so, like the philosophy of BitShares was that um, like you have this BitUSD, BitCNY, Bit this, Bit that are pegged to real world currencies, and then they're backed by BitShares. And then the idea was that over time, people would just start using BitShares as the real, um, like as the real currency. Basically, in the long run, the utility of BitShares, the thing that gave BitShares value and that meant that BitShares could be used as collateral for the bid assets was that in the long run, BitShares itself will become like the universal currency, blah blah, like people used to think Bitcoin would become. And actually, and then Vitalik, he believes that a stable, like a fixed supply currency can never be stable, and he thinks that the deflationary, like deflationary coin, or like a coin that does not have a variable supply and a coin that is not managed, has like a managed supply, adjustable supply, can never be anywhere near stable and can never actually be used for normal trade, because the demand for currency always changes in an economy. And I don't really know where I stand in that, like what I think will happen. But I definitely think that in the long run, eDollar should like try to become like future proof, in the sense that it should be allowed to survive. It should be able to survive even if the USD collapses completely, like the Bitcoiners say will happen. And the way it will do that is that it'll become like the thing that Vitalik, he talked about when he talked about stablecoins, when he talked about like the ultimate stablecoin, and that is like an index currency pegged to the price of a basket of goods that that corresponds to the price, like the prices of the stuff that an average consumer has to buy, or wants to buy with their money. So like you'd have in the long run, it wouldn't be eDollar, it would be eCoin, and then eCoin would be pegged to like some amount of grain plus some amount of gold plus some amount of iron plus blah blah blah, and so on and so on. Like some basket of all these things put together. And then like the way it should be done is that slowly you could phase this pegging mechanism in. So like at some point, eDollar is no longer pegged 100% to dollar. Instead, eDollar could be pegged to 95% dollar and 5% gold or something. And then it's like slowly you could phase in gold, and then after that you could start phasing in oil or something, and then slowly like phase in all these different commodities. So that for the average user, they'd not really, like what they would see wouldn't really be that, oh, now I suddenly have to use this new currency. Instead, they'd see like this would happen, of course, in response to the dollar using value as well. Like when, like the Bitcoiners say, at some point the dollar will collapse and all that. When that happens, then then you'd be able to see the dollars starting to lose value and all this stuff, and hyperinflation and blah blah blah, and then eDollar would just start pegging itself slowly to some new basket of commodities, so that it wouldn't lose that value. So it would hold its value basically. And yeah, there's probably going to be some really sophisticated way of doing it. Like we can figure out at that point, if it happens at some point in 10, 20 years in the future, or 30 or 50 or however long it's going to take, if it ever happens. So yeah, it's pretty interesting. Where will the price feeds come from? At first it's going to come from like a script that I run, basically. Me and then some other guys, we're going to like centrally control the price feeds, and just like I said, it'll be fully centralized at first. And that's, again, it's important to realize that if the price feeds are centralized, then the entire system is fully centralized, because the price feeds can you can use the price feeds to very easily completely manipulate the system. So that's something people have to keep in mind at first. But then as soon as we can, we will switch over to using Augur as well. So we will still use the centralized price feeds, but only as like a fallback. and Augur will be like the primary price feed provider. And then over time, we will want to like decentralize it even more. So we will use both Augur and some centralized price feeds and some more stuff, like add even more on. And then all of this will be controlled by the system of constitutional slowness. So it won't be possible to suddenly change the source of the price feeds. Like if you want to add a new source or remove a source, then there will be some mechanism so that will take a month or something, or 3 months, or like very far in the future it could take a year. So you'd have like, so if some guy decides to mess up the entire system, he can actually do it, but the system will not like be messed up instantly. It will still take a year, so there'll be plenty of time for the system to like wind down. And of course that should completely disincentivize anyone from trying to do that. And also the people, like Maker, will have the ability to stop this kind of priming event at any time. So like if someone decides to use some bogus price feed, if someone somehow gets the authority that enables them to change, like to enter, like use a function in the contract that makes it start using some bullshit price feed, then like the Maker will just very quickly be able to stop that. And if the countdown is, let's say, 1 month, then it will be extremely easy to avert, and it will not take more than like a couple of hours probably to discover it and then stop it. Mentioned first Hangout, maybe more consideration should be given to creating an original name and marketing as an original name coin pegged to the US dollar. Yeah, I'm open for suggestions. Like if someone can come up with a really awesome name, then I'd love that, because that also means that it could transition into being like, at first it could be pegged to US dollar, but over time it could be pegged to like a basket of goods, which I think is better. But my biggest problem is, and the reason why I didn't go with eCoin at first, is because I can't come up with a proper trading moniker for eCoin. Like I can't really think of any way that you abbreviate it that looks good. And I think actually that the trading moniker is the important part. Like, so it doesn't really matter that it's called eDollar. The thing that matters is it's called eUSD, which I think is great compared to I don't know, ECN or like XEC or something for eCoin, which I think both are crap. So that's the big issue. But I'm thinking about, like, instead of calling it eUSD, when it's written, on like official UI and fancy, like when it's supposed to be fancy, it should be the CUSD and not eUSD. So it should be the Ethereum sign thing. Let me see if I can find it somewhere. We go to see how it looks. I don't think I've actually even tried writing it down yet. So can't find it anywhere here. Okay. Anyway, so I think like could be even less threatening to the powers that be in early days. Yeah, that's fine. But the thing is, it's not going to be like in the early days, it's not going to be threatening to anyone. So I don't think that's a big problem. And there's no such thing as a dollar trademark. There's like 20 currencies or something that are called dollars. So I don't think that's a problem at all. Actually, I think a problem with using dollar is that dollar is so like dollar doesn't actually imply USD. It could also very well imply like Zimbabwe dollar. So like you have eDollar. This eDollar is some sort of stupid email dollar that's worth nothing. I could easily see how people would could confuse it with that. I mean, it's a bigger problem to use USD, eUSD. That's a bit of a problem, but I think, I mean, you see that used everywhere. I think like USD is used like very commonly denote IOUs, and I mean um, like it's been used in a lot of places already in the cryptocurrency world, and you have a Tether, they call their IOUs as USDT, and BitShares call it BitUSD, and all the Ripple IOUs, they're all called blah blah USD. Um, so I think that's just like a pretty standard way to do it. Of course, over time it cannot be used if the when eDollar is no longer pegged to the USD only, then it'll be really weird to call it eUSD, and then the name will simply have to be changed. But that's going to be far into the future, so I don't think it's a pressing problem. Yeah, well, if that happens, I mean, that would be fucking great. If we get to a point where the central bank decides that they have to do something about eDollar, and then they say it's confusing or something, then we'll be like, fine, we made it, and then we'll change the name. Uh, yeah, but yeah, I mean, I again, I would prefer to have like, I mean, I don't like new bits as a system, but I really like the branding now. I really like the name. Um, so I used to also really hate the name. I used to really bitch about the name on the forums and stuff. All right, man. Thanks for your questions. E dash cash. Yeah, it has the same problem as the eDollar, I think, where it's like so 1990, which is mainly. But I think also the problems with eDollar, I think, is mostly in the like in the spoken eDollar. I think eUSD works reasonably well actually. Um, and you can also say eUSD. It's just like more convenient to say eDollar. So I think maybe over time the that should become the entirety of the branding. Like so, eDollar will become like an informal name for it, and the trading moniker will become the real name, possibly. Of course, this is that might not appeal as well to ordinary consumers, so I don't know. Yeah, eDollar, eEuro, ePound. The problem with this, of course, is that it's going to be one eDollar, but there's probably going to be many different types of eEuro and ePound. Um, so, or maybe there won't be actually. Maybe the first person to, yeah, that's something we'll have to think about, like how to call those other things, because ideally, I think there should be there should be several different versions of each. Um, um, so yeah, I don't know what's gonna happen with that. Is this the same thing? Yeah, I'm going to buy this one. I'm going to buy this. What was it? $23 or something. Huh? How do I go? I was able to go back before. I'll see if they take Bitcoin. Do you accept Bitcoin? Please, it's a currency of the future. See if that works. Okay. Any other questions? Yeah. I think it's really nice. This one here. And I guess it's, whoa. Now suddenly it's this one. Yeah, $23. I wonder how much work it takes to make this thing. I mean, they only have 61 purchases at $23. They're only like, what, 1200? Okay, still an okay amount of money. Yeah, yeah. So yeah, yeah. The problem is it's not enough to just make a cool uh, framework or app or whatever and just put it out there. It's also a lot about getting the buzz going. Yeah, I'm gonna buy it, and then what should I do with it? Like, should I just is it like a file that I download or something that I can just send to you? License single application. Oh, right. So this is how they make the money. They sell the extended ones. Uh, okay, but Ola, how about we do like a Skype call tomorrow or something, um, and then we can talk about it, or whenever you're free. Okay, this is my Skype. Okay, let's talk on Wednesday then. We can take a look at it, and then next Sunday I'll be doing like another hangout like this, but I'll be trying. I will make like a more formal presentation that's supposed to be like recorded and put on YouTube and that kind of stuff. Maybe even edited, um, where I like go through stablecoins and eDollar and like try to sell it basically. And yeah, try to pitch Maker as well. But that's another thing. That's one of the other things I have to start doing soon because I'll need to sell the freaking Maker in order to make money so I can do market making for the eDollar. So that's when you're gonna hear from me soon. Lots of pumping. Yeah. On the subject, actually, I just wanted to one last thing. I want to explain the monetization, the risks of the monetization that Maker has right now. Yeah, Homestead. Like I'm doing Frontier, I'm going to launch like a funny money version of it where you can just generate your own collateral. So like you can get this, you can put collateral in the contract for free. So we can actually test it out. We can even do stuff where we try to like we artificially lower the price feed and that kind of stuff and see what happens during Frontier. So we can see what we can simulate a black swan event, even though that will not really like the problem will still be that a simulated black swan event doesn't really show the economic factors involved because the real issue actually during a black swan event is that you need to have some way to communicate to those really dumb users who just bought the coin and don't care about anything and they just bought it because they think it's safe and you know you need to be able to like or you need to at least in some way cover the amount of people who are just totally absent and don't even notice that a black swan event is about to happen um, because you need to reduce the supply, right? So that's the biggest issue of the black swan event, that you have an unknown amount of people who simply are completely unaware of the risk of a black swan event and don't understand that there's an advantage to like get like cashing out of the system if the supply has been increased too much. Yeah. Okay. So anyway, no, I'll talk about the business plan, the business model of Maker next time. Also, when I start pitching it a bit.
Okay then. So this is it.
Yeah, that was a quick 2 hours.
Thank you so much again for making this happen. I think it was a great hangout, lots of questions asked, lots of answers given, and looking forward to the next one. Thanks everyone for being here.
Thanks, guys.
Okay, bye-bye.
Go to the chat room. Wait, let me just pull up the chat room. gitter.im/Ethereum builders/eDollar and ask
Yeah.
any questions there, and I'll answer them within a couple of hours.
Now, hello.
Yep.
Hello.
You told me to unmute my mic. I didn't see your chat in time.
Unmute your mic and say something funny. Tell some jokes.
What's going on?
No.
Knock knock.
You were asking a couple of questions, and I just wanted to suggest unmuting the mic. It's easier to ask questions, by voice. That's all.
Oh, okay, yeah. Well, I think we finalized it. We're gonna meet. We're gonna basically connect on Wednesday to discuss.
Yeah.
Yep.
To discuss that. So.
Okay, guys. See you around the eDollar Gitter chat room, and hopefully next week with WebRTC support.
Hopefully.
Really fancy.
Okay. Bye-bye.
Bye.